There are five main components to our trading approach, and what I'd like to do in this video is discuss one at a time, and when we're done we'll get up to where this chart is, where all the components of our approach are illustrated. But this is a part of what we show in the daily trading plan, and this is exactly the chart that we present in the broadcast room. This is actually running live as I'm doing this. So let me take some of these things off and we'll rebuild one at a time so you get kind of an idea as to what you're looking at. First, we start off with our price bars. These are bars that we've developed in-house. They are proprietary, and they're based upon the old idea of the point and figure, and most currently range-bound bars and Renko bars. But we don't filter any data out here. We just present the data so that it smooths out the presentation a bit, and it serves to filter some of the noise that's associated with the markets without deleting any text. And so if I bring in here, say, a 15-minute chart and compare it to where we have our chart, you can see how it compresses the data, and it really just gives us a snapshot on one screen as to what's going on. So this move coming down here is being represented here on the 15-minute chart. But to see this progression to the upside, I would have to go all the way back here and scroll back. And you see how it really does smooth out the pattern. And so when I start measuring retracements and extensions and such like that, it's a bit easier to be able to see more of a compressed version of what's been going on here. And especially when I'm in the trade, it enables me to follow the trade a little bit easier without having to factor in the component of time. Now, the next thing that I look at are these levels that I post to the screen. These are levels that we calculate based upon multiple time frames. There's some Fibonacci consideration in here, but there's also a consideration of where the buying and selling activity of the institutional traders were a part of this market. That is a huge component to listing these onto the screen. Now, I know at first glance, watching this video, that these are suspiciously accurate. And that's where the demo program comes in, to where you can get these early in the day and then compare it. Put them on your chart, represent them as horizontal lines on your chart, and see how these prices, see how these trading formations occur at these areas. And we map these out both above and below this market. So we always have a framework from which we're working. So here on the chart in red always denotes resistance. So we have resistance, for example, here today working at 1702, and we're showing support here at 1785.50 and just below 1685.50 and just below 1682. So it gives us a framework, and it represents how we pursue the markets. It's a huge component, and I think that after a couple of days of watching it in the demo, you're going to want to know where these levels are. Now, the next thing that we focus in on are formations, and these are classical formations. You see a very classical head and shoulders formation. What makes this important is that it occurs at one of the levels. And so once we have the levels posted up on the screen, we watch for the price action to approach those levels, and we try to find a way at a very low risk where we can participate. Now, this happened, after hours, and so we don't have a trade in here, but it was a great way to confirm that this area was going to hold. The market did come down, it retraced, and this is where we placed our entry. So that's how the formations come into play when we're trading a market using our levels. The other consideration that confirms these levels is that I monitor institutional activity. As a part of our data feed, I receive all the bid and offer information on all the exchanges. So I not only look at the big block trades on the futures, but I also look at the bid and offer activity and the big block trades on the stocks themselves, as well as the single stock futures. Today's market is a bit more complex than it was 25 years ago. There are different instruments that are being used by the institutions, and sometimes it can be misleading where we might have an advantage advance or a decline on light volume on the big board. Well, that's only part of the picture now. You may have a whole lot of volume in the other instruments that may not be reflected in those volume data figures. So that's why it's important to look at all the information. So I capture in real time all the trading activity, and I have programs that enable me to monitor when they start selling Apple, when they start selling Google, and I watch all of the stocks that make up the S&P. I give more weighting to the ones that have more weighting in the index. But all of it plays a part, and it really does help to be on the right side of the institutional activity. The fifth and final component of our charts represents this momentum indicator. I don't like most indicators because they often fall behind, but this momentum indicator enables me to just compare different trends. And you can see that when we were coming down here, we didn't have quite the momentum we did as far as this one. Let me make that a little bit more clear. If we consider this move to the downside, this had this kind of momentum behind it. When we came to the next leg coming down, we didn't have quite the momentum here as we did previous. And that's really all I gather out of momentum. I just compare different legs as to what the momentum was during that time. And so when we started to see a little bit of a consolidation action as we neared our target, this action right here with this momentum aided me to say, we have profits here, let's take them. And we did. And so by having the chart available to you in the broadcast room all the time, you can look at these 5 principal components. You can look at the price bars and see how prices are advancing and declining without a lot of the noise that's associated with most charts. You can see where the levels are to see where our targets of support and resistance may be. You can also look at a clear presentation of the formations that occur in this market and have since the beginning of charts. When I see major buying and selling activity of the institutions, I mark those on the chart so we know where that activity occurs. And lastly, we're able to compare the momentum of different legs that make up the chart. So this is the way that I analyze the market. How we trade it, well, that's where the options come in. And that's what this program is about. Showing how we evaluate the market and then how we use options to reduce the risk to participate.